So it's about time that I actually created a full video on DCM, or Data Communications Management. And this company I've been talking about in the background for the past 3 months. The first time that I revealed to the public that I bought this company was back in March. I've been telling my Patreon members all about DCM and why I'm super bullish on this company, but today I'll lay out for you 3 main points as to why I love DCM right now, a few other small little points after that, and I'll talk about a fair valuation I think DCM should have as a business based on certain metrics to give you a target price for what I'm looking at right now based on the business as it stands today. If you guys haven't already caught on, the ticker symbol for the stock is DCM. And this stock currently trades at $1.36. Some of you guys might consider this a penny stock. However, I would say it differs from a traditional penny stock because this company is already earning revenue. It's got positive cash flows as well as positive net earnings. So this is very different from these other penny stocks that I've covered previously on the channel, where they're just growing the revenue extremely quickly but losing tons and tons of money. If this is a stock that you're interested in learning more about, then stick around. For now, let's cue the intro. Hey guys, if you guys are new here, my name is Daniel, and here on this channel, we talk about stock market investing. I focus on Canadian companies. As myself, I am a Canadian, so I try to invest in my own home country and keep up with what's going on with the economy around here. I do hold the majority of my portfolio in US stocks though, just because there's a lot more information on these companies out there, a lot more exposure, and just the US market's bigger in general. I won't ever be disclosing that portfolio on this channel here, but if you guys want to check it out, I do have a Patreon link down below. Oh, and right now, because I'm really bullish on the company, I'm going to put in an order that will hopefully fill on Monday for $1,000 worth of DCM shares. So starting off with my analysis, the first point that I'm going to make here is that DCM is a cash flow machine. So currently they're generating about $47 million in cash flow in the previous year in 2020, and their market cap is only $59 million. Earlier this year, DCM was trading at under a $47 million valuation. This means the company was generating more cash than its actual market cap. So you could buy the entire company for less than how much cash is generating each quarter. This is phenomenal in my opinion, and that's why I decided to buy into the company in the first place. Now, there are more sweet points about DCM as a business, not just their cash flow. The second thing is this company is a turnaround story right now. DCM has a long history, about 60 to 65 years, and they actually started off as a print company. What they would do is print out marketing material for companies to send out to their clients. Think of like big banks or retailers who have important mail that they want to get to their clients in order to win more business. This is a business that was decent maybe 15 to 20 years ago. However, we've moved from the print world to the digital world nowadays. Everything nowadays is about email, media, digital content, so print is definitely a dying industry here. DCM realized this, and they branched out into two other revenue segments. They first of all have the conventional print solutions, which is only growing at 2.24%. They also have a tech-enabled marketing workflow, which is growing at 15%, and this is under the DCM Flex platform. And lastly, they have a new digital asset management tech-enabled service, which this is growing at 21.2% as an industry sector. I think a lot of people are viewing this company as a conventional print solution company because that's what they've been known for the past 65 years. However, with the tech-enabled marketing workflow and digital asset management tech-enabled services, they're able to sell these products to their current clients who are using conventional print solutions and looking to switch over to more digital marketing. When they sell these services to their clients, they're going to see higher margins from this revenue, as well as their clients are going to be happier because this helps streamline their workflows, which ultimately saves companies costs. For the technology-enabled marketing workflow, an example of this might be, let's say a company wants to send personalized mail to each of their clients. So for this mail, you need to add the person's name to it. So in order to do this, you're going to have to either hire someone to change the print copy each time with each client's name and each client's address and print it out like that, or you can employ their technology-enabled marketing workflow to be able to import their list of clients and just auto-populate it on each form and send out that printing request. This can be done with one click of a button instead of some guy sitting in the back room for 24 hours trying to import a list of maybe 2,000 different clients. On the digital asset management side, what this service is basically allowing companies to share digital assets across their sales team, for example. Let's say an ad copy is created by one of the employees of TD Bank, and he works at a branch in Vancouver, BC. However, some guy in Toronto wants to use that, and also a guy in Nova Scotia and a guy in New Brunswick. They could either Slack him or message him and ask him for the ad copy to be sent over, or if you have a digital asset management service, you can just find it on the platform instead of having to go to the guy directly and ask him, where can I find it in the shared drive, or can you send it over to me through email? And this also allows tracking versioning of the assets. So if someone makes a change, there's ways to track the change through the software instead of sending a Word document back and forth. And each time you click the save button, you can't go back to the previous version. So DCM has been transforming from a conventional printing solutions company to a technology communication solutions company. Looking at the percentage of revenue from the digital services side, it's only 32% today in 2020. By 2025, they're trying to change that to 75%. So we're going to see a lot higher margins from DCM going forwards, as well as I predict we're going to see higher revenue numbers because they're going to bring greater efficiencies to their clients, and these clients are going to adopt more and more services because all their assets or marketing materials is moving towards a digital platform. Now, I'm not saying just go out and buy DCM because I'm saying to do it. What you should do is take the information that I'm telling you right here and go and do your own research and make up your own mind and why you're buying into this company. I'm just explaining my bullish reasons, so just take it with a grain of salt because I also am a shareholder and my interests are that this stock goes up in price. The third reason why I'm buying into this company is because of the new CEO, Richard Kellum. He's taken this company by the bullhorns and has started transforming the company in the past 90 days that he's been CEO. When I listened to him on an investor presentation, he sounded very confident, knew exactly what the company was about, which I think is very impressive. Typically, you'd expect a person coming into a company after about 90 days wouldn't be very fluent about what the company actually does. There's still a lot of things he or she would be picking up and learning about, but listening to Richard Kellum speak, he seemed very confident and knew exactly what the business was doing, where its flaws are, and where it should be going next. One major change that he made when coming on as CEO is that he took out an entire layer of management. And to you at first sight, that may not sound like the greatest thing. However, I think this is a huge improvement to the company because when you take out a layer of management, that just means communication flows a lot better from the lower layers to the high-level managers. Usually a common complaint from employees is that their ideas are never really heard out, and that's just because they get lost in the chain of management. And when you have too much management in a company, there's a lot of inefficiencies, as well as managers cost a lot more money than a typical employee. So from an organizational standpoint, this is going to cut out some major costs for the company that is not really adding much value in my opinion. Although I present to you these 3 facts about DCM, there's still a lot more about the business that you need to figure out for yourself. And there are a few also cons that I see out there about DCM. And one of those is employee satisfaction. Just looking at Glassdoor, the company has a rating of around 3.3 from their employees, and about 50% of them approve of management and the company. This is not really a great sign because when employees don't really like where they work, then you get higher turnover. And with higher turnover, it means that you have to find new people each time, train them up, and that's just more cost. As a company, your goal is to keep your employees as long as possible because then you don't have to retrain new ones to take up their roles. But because the company is in turnaround mode right now, I'd look at Glassdoor over the next 12 months and see how those reviews slowly shift. For now, Glassdoor doesn't even report the correct CEO, so if people are writing their reviews based on the previous CEO, then this is an accurate reflection of the current CEO, Richard Kellum. The CEO himself mentioned that he's aiming to get a more diverse workplace, which has never actually been mentioned before in DCM's history. In the long run, this should lead to happier employees and employees that stay longer at DCM. And with all this said, let's jump into my computer and look at the model that I created in order to determine a price target for DCM. In this chart here, we're going to calculate the target price for DCM based on the enterprise value divided by revenue. Now we can see DCM has 3 segments of revenue. They have their print, DCM Flex, as well as digital asset management. I got these numbers, the revenue numbers, from their investor presentation. We can see they have $178 million in conventional print solutions. They have $78.6 million from the DCM Flex, which is a technology-enabled marketing workflow platform. And lastly, they have $3.4 million from the digital asset management services. Here we can see the multiples of comparable companies that play in the print space, in the workflow space, as well as the digital asset management space. And they have this laid out down here at the bottom of the presentation. They have a total enterprise value to revenue for the print space at 1.1, for the tech-enabled marketing workflow space at 1.8, and the digital asset management space at 7.9. So I put these numbers in here. Now we can get a total enterprise value for each of these segments of revenue. For print, it's $195.8 million. For DCM Flex, it's $141.5 million. And for the digital asset management portion of their revenue, it should bring a total enterprise value of $26.9 million. Now, if we add these together, we get a total enterprise value of $364.1 million. Currently, the enterprise value for DCM is $144 million. The upside to this, if they were to reach an enterprise value of 364.1, is a 152.88% upside to the current price today. This brings us to a price target of $3.44. And we can compare that to the current price of $1.36 as of Friday. Now, in the stock market, the price that the company's shares are trading at does not always reflect the actual underlying business. And I do believe that DCM is undervalued right now based on this valuation that I've done. Now, the market price of a company is not fully reflective of the company's intrinsic value. And for me, the intrinsic value, I believe, of this company is about $3.44. Now, everyone can have a different opinion as to what the intrinsic value is because all investors have different goals. Basically, we have different rates of returns that we're looking for and different prices we're willing to pay for companies. So for me, the target price for DCM, at least based on this valuation, is $3.44. Now, I think this is a bit conservative for DCM because they are in a tech-enabled marketing workflow space, and this industry sector is growing by 15% year over year. And on top of that, they're also in the digital asset management space, which is growing by 21.2% each year. And this revenue segment right now only makes up $3.4 million. And I think this is going to be a huge growth driver for DCM in the future, and this number should increase rapidly in the next year or two. So going forward, I'm going to be looking at how the revenue from the digital asset management grows, because at $3.4 million, this is very small for them right now. And with some very large enterprise customers that they have right now, I'm sure that they can sell this digital asset management service to them and supercharge the revenue from this segment over the next year or two. On top of that, the tech-enabled marketing workflow is just kicking off, $78.6 million. They're trying to convert a lot of their conventional print solution customers over to this tech-enabled marketing workflow. And the margin for both the tech-enabled marketing workflow as well as the digital asset management are considerably higher than conventional print solutions. And what this ends up being is that the business will be operating at a higher margin, and basically every single dollar that you invest in, you're going to get more back for that dollar. If DCM is going on your watch list after this video, leave a like down below. As well as if you guys have done research into DCM yourself, let me know what you found and what's your price target for DCM. I'm going to throw up 2 videos on the screen afterwards. If you're there, I'll see you there. If not, keep up the grind and have a great day.